Good afternoon, good evening, good morning, wherever you are around the world. It is so cool to have you here today. My name is Michael. If you don't know already, if you didn't see my face on the billboard on the way here, I am the founder, co-owner, the big brain in charge of chicanery and shenanigans here at backtothefuturetrading.com. And I'm so glad that you're here. It's an honor to spend this time with you. And Lance is coming out of the gate hot. I appreciate that. So Lance, we're going to answer your questions first. I'm going to do a brief review, if that's okay. No, that's what she said. Let me just do my brief, sexy intro here, and we'll tear right into your questions. Can you give me 15 minutes? And then we'll go through it. We are the only company in the world. We are weirdos. We are the rebel alliance of time travelers. We believe that markets are predictable, to a large extent predictable, using time. Time and predictive timing for us is a way of life. It's a language. It's a faith, in a sense. For me, as close to a religion as I have right now, I've studied it now most of my adult life, and I've learned things that I'm hopeful will translate over to helping you, as our other customers have, succeed as traders. We give out the times in advance and the directions in advance for markets that you guys are paying attention to. And once a week, we actually publish those and email them out. I send them to people on Facebook. I post them in Facebook groups. I post the link on our Facebook page. Side note, we do have a Facebook page, Back to the Future Trading, if you want to join us there. Lots of great information rolling out all the time. But 2 days ago, I posted the times and directions for the E-mini S&P, for oil, for the NASDAQ, for gold, for the DAX, the euro currency, euro dollar, pound dollar, Ethereum, in an effort to prove to you that the market you trade is not random. Pretty crazy stuff. And without getting too engrossed into the PowerPoint presentation, we believe that you as a trader are underserved and underutilizing your potential by not paying attention to time. We believe markets to a large extent are rigged by market makers, and that those men in high towers and castles follow a plan, a pre-planned market every day. Are there surprises? Sure. Is it 100%? No. Is it way more than 50%? We're going to see here in a second. And so I want to just review a few things with you. We have a special guest today. Jake will be back with us here shortly at the half-hour mark, and I'll be introducing a customer who started with this program and now finds himself with multiple funded accounts. He traded so well with it, other companies said, "Here's our money. Trade it. You're doing great." And he has a unique setup that he's going to teach you if you're a customer here today or a prospect looking for a great system to trade. Jacob's a great asset for us and a good mentor for those of you that have met with him one-on-one. When those signals go out, the charts on your screen will have two halves to them. So Lance, one of your questions, does this work on the daily charts? Yes. And so on our software, the indicator specifically formulated for NinjaTrader 8, there are two sections, Lance, the future signals on the right-hand side of this dotted white line right here, which tells us where we are. And then these are the forecasts that have passed by. These are the dates or the times that we were expecting or waiting for something to happen. So for example, Bank of America, 216. If you're looking at this chart, I've been doing some study with banking stocks, and this is actually a 9000 Lance set to trading days with a swing strength of 8, one of our 5 cardinal settings. So Lance, daily charts most of the time are a 71400 calendar, swing 8. This one is a 9000 swing 8. All the settings for the webinar are 714. The settings are also 1.5 ATR. There is no PDF of the setup, but I'm going to teach it here to you in a second. So if you're an options trader or a stock trader, we can apply this to SPY or gold or Raytheon. We could apply it to GameStop or any of the meme stocks that people are following. And what it does is it gives us a sense of what to expect in the future. For example, we're seeing that the software is warning us that March 13th was a pause point in the same way that December 8th and 10/3, October 3rd, were points in time where market makers have been pushing price higher. And so on this daily bar right here, rather than sell, Lance, I would be fearful of this as a put. If I was an options trader, I would be watching to see if the very next daily bar didn't come up and engulf that one after a stop run. The white dot is warning me that between March 13th and April 27th, there will be a period of buying and stop running. Does that make sense? So we can use this on daily charts. If you're an equities trader, if you're looking at long-term swing trades with things like Bitcoin or Ethereum or the dollar pound or the euro dollar, we can also use it on an intraday cycle. And one of the ways I try to prove to people that what we're telling them is truthful is to actually show the signals and give the times out in advance on popular markets that everybody trades. And so I'd like to show you the signals that we sent out 2 days ago, get a feel for whether or not the times worked, and a signal encapsulated with rules becomes a setup. So what's the difference between the signal and the setup? If you have the software, you tell the indicator, hey, I want to look into the future and see if there's anything I should be aware of. Are there any times in the future where the market is likely to go up or down? And when the program comes back, it says, hey, these are the times on the NASDAQ 1-minute futures contract lately where some squirrely things have been happening with regular occurrences. So everywhere you see a blue line, the program went out across thousands of bars, and Lance had said, these are times lately where selling is almost always happening. Not 100% of the time, but often enough that the indicator found that time and said, huh, interesting, it seems to go down a lot at this time. And then vice versa. All the white lines at the bottom of the screen are the times where the software, the indicator said, hey, in the NASDAQ on a 1-minute chart, these are the times where, for one reason or another, somebody keeps pushing prices higher. 100% of the time? No. But often enough that an algorithm without emotion designed to look for these times found them. They're time targets. And so I publish these times on our website on Tuesday. I publish them on our Facebook page on Tuesday. I handed them out to people on Facebook groups Wednesday morning. So since Tuesday, Wednesday morning, these lines have been sitting in the public space. These are signals. It's raw information. So what do I propose? Well, a setup is a rule that surrounds the signal and says, what will we do when we get there if we do anything? Specific trade rules give us a back-testable strategy, or a strategy that is able to be back-tested. That's grammatically correct. And on the page that I gave everyone the signals with, I included the rules that we're going to be applying to the signals today. A very small paragraph, Lance, with a link to a video. If you're anxious to see those rules, I'll paste them into the GoToWebinar chat box. So that link is there if you want to go and click on that video and follow that link later on. It's on our YouTube channel. And again, just a short note. We do have a channel. All of the recordings are posted to that channel at Back to the Future Trading. Go ahead and subscribe to that. And when we put out videos, you'll be the first to see them and go back and review what's happened there. So on that page, we taught two setups. Number one is called a signal with trend. One of the amazing side benefits of being a vendor in this space, a good one with good customers like you guys, is we learn things from you as we teach things to you. And one of the things we learned is that most of you that are making money are following trends. You're not top and bottom pickers. You're not trying to catch falling knives and rocket ships. And so we paid attention to that. About 2/3 of people who are actively profitable said, hey, I follow the trend. Also, most of you that are making money will say things like, simpler is better. How many of you believe that if you're trading home right now? Simpler is better. The more information on my chart, the more distractions I have, the harder it is to execute. In fact, the phrase analysis paralysis is commonplace. So what I'm showing you here right now is distilled from what I've learned from you. Keep it simple, follow the trend, keep your stops small, and let your targets run. So a signal with trend is kind of like this. When the 120 moving average is rising, and in this case, the indicator is painted white when it does, I'm going to enter on the close of the buying time candle. So if my signal is at 5:48 Eastern, when that candle closes, 3, 2, 1, I place my order at that level. You can use a limit order. You can go in at market. Most of the time, when you know the time, you can place a limit order and limit your slippage. My stop is going to be 1.5 average true range values away from the low of the candle. Most of you use some form of a dynamic stop. Stretchy pants stops. Elastic. When the volatility is high, the risk is high. When the volatility is lower, the risk is lower. The rewards are greater and the rewards are smaller. So we get in and we exit by the next selling pressure signal. Do I sell at the sell signal? No, because I'm following the trend. Now, this is just one example of how you can use these times. If you're a top and bottom picker, about 20% of our customers do what you do. It's just a little harder to execute emotionally, psychologically. When we arrive at the next buying pressure time at 6:42, we enter on the close of the candle. The stop is 1.5 ATR values away. We exit at the close of the next signal. At 7:03, do we sell? No, we exit. When's the next buy time? At 7:12. We enter at the close of the candle. The stop is below the white line, which is 1.5 ATR values away from the candle. We enter at the close and we exit by the next selling signal, forgive me. Yeah, Lance, if you're looking for this on your signal at home, let me hit escape. In the indicator, about halfway down on the right-hand side, Lance, you see where it says use volatility stop offset? You can set a fixed stop or target, or you can set a volatility stop. And so right here, we have that set to a 7 period with a 1.5 ATR, and I have that box activated. Okay. The other signal that I taught you about is called a puncture. A puncture is weird. It's a mind bender, but hear me out because it's kind of cool. When the trend is up and we arrive at a selling pressure signal, Tim, we normally expect one of two things: the market to go sideways as profit is taken from the longs, or we expect it to drop. So possibility A or possibility B. What if it keeps rising? What does it tell us about the behavior pattern on that day? Are the sellers there? We're expecting them at 9:30. The trend is up. I want to buy, but I don't want to stick my hand in a box that I know is filled with hornets. So Tim, the higher the price goes at the time signal, I'm listening inside of the box for hornets. I put my ear close to the box. I don't hear any hornets. It rises a little higher. I put my fingers on the box and I don't feel any vibrations on the side of the box. It goes a little higher. I shake the box up and down and then I listen and I still don't hear any hornets in the box. It's getting reasonably safer for me to open the box. And as price is rising higher and higher at a time where sellers historically push it lower, it's telling me that there's a very strong possibility banks, institutions are not selling the way they usually do. There's a void, a vacuum in the behavior pattern time frame. And so with a signal like this, I buy when the stop line of the sell signal is broken or punctured like a knife in a tire. I enter with a buy stop on the opposite side of that blue line. My stop is going to be below the puncture candle, and I will hold it until the close of the opposite signal. That's what a puncture is. It's a failure with trend, a failure of the usual people to show up and do what was expecting. Make sense? Now, what's crazy about all of this, what's bananas about all of this, is I gave you the rules to the system and the times for the signals of the system, before the market ever opened. Now I want you to think about that. I gave you the signals and the setup before this market ever opened. We're going to look at two of them together. I'm going to introduce a handsome man in California who shows you how he trades them in a little bit. But I want you to pretend we had to trade these signals. Someone held a gun to our head, and it feels like a mistake at first, but let's see what happens over time. Ready? Put my cursor tool on. We'll go through this together. At 9:16, we enter at the close of the candle. It never hits the 1.5 ATR stop and lands. We get out at 9:26 at the close of that candle. Now check it out. At 9:26, the sellers are not there. Lance, it's rising and rising and rising. Any sellers? No indication that it's being pushed down at all. And our buy stop is triggered on the other side of this blue line. It shoots straight up, but I have to be out by 9:39. My stop would be below the puncture candle right there. That's my stop, just like the example I showed you. 9:39 is in the direction of the trend. And at 9:39, I enter at the close of the candle. The trade takes heat. It doesn't hit the stop. ABC pattern back down. And now I exit by 10 o'clock. That's the third winner. Net gain of 24. Now, watch this. The first puncture takes place right here. Boom. My stop is just below the candle. Failure. In, tags me in, some sellers show up. There's my first loss. The second time through on the other side of the line, I'm in. My risk is almost nothing right below that candle. It shoots up, fades back. I'm still positive and I'm long. My long is out by 10:21. Now, Tim, the trend is still up. The buying signal that I told you guys about on Tuesday is arrived, 10:21. And the program has warned us that whoever's behind the curtain, the Wizard of Oz, who I believe is Jamie Dimon at JP Morgan, who pays more money in fines for trading violations than any other bank we can examine. It's one bar off the low, and it takes off. It breaks out of the high. We're in at the close of the candle. The stop is 1.5 ATR values away. And now we're out at 10:52 with a 68-point winner. It comes up, it touches the line, it doesn't go through the line, comes up now at 11:06. I'm out at 11:09. And then right here at 11:10, it hits the stop. Womp womp. Four winners, five winners, two losers. The next signal is at 11:25. Now, Tim, as an advanced user, what are you thinking is happening right here? The 11:10 signal is stopped out, and the 11:25 signal, which is 2 days old, now pushes down. They're not little small pullbacks anymore, are they? This one, that's a pretty big pullback. What do you guys think this chart is telling us about the health of the trend in those two signals? Lance, what do you feel like is happening? What are the vital signs of the market? If the buyers didn't show up anymore at 11:10 and they showed up even more at 11:25. or the sellers rather. $11.35 comes. We got to follow the rules. Close of the candle, 1.5 ATR stops away, targets values away. We exit with a little bit of profit at 11:51 coming into lunchtime. And then look, it drops down again. More sellers, obviously. And then 12 o'clock lunchtime, we're out. If you just trade the morning session, what are we left with? We'll bring out our magic calculator. And this works for oil, the NASDAQ. It works for DAX. It works for the euro currency, dollar CAD, pound dollar. Works for Tesla and Bank of America. It works for wheat and corn and oil. Soybean oil, all of these instruments are following these same things. So here we go. Ready? 4 plus 23 plus 24 plus 8 plus 68. Oh my gosh. Plus 8 plus 13. Now the minus side. Minus, let's say 16 minus 17 is $115. The entries and exits are at the close of the buy and sell candles. The stops are one tick above the blue lines and below the white lines. The entries for punctures are one tick above the blue lines and one tick below the white lines. So in the morning, Tim, that's $115 in the NASDAQ times $20 per contract is $2,300 per full-size hypothetical lot, or if you're trading a micro, $230 per micro lot in the MNQ. Now, there was a song when I was a kid growing up. I listened to the music my parents played on the radio. And the song started, "What goes up must come down." And now things are starting to go the other way. So we come out of lunch, 1 o'clock. You want to trade through lunch, we'll count those two. Long at 12:12, full stop. 12:30, waiting for a puncture, no puncture, no puncture, no puncture. Closes below the moving average. We're out at 12:44 plus $4. 12:51, signal with trend. I'm out at the close of the 102 candle. 108, it's above the moving average, closes below the moving average, stop is one tick above the crossover candle, and I exit by 120. Bazinga. There's a puncture right here. It goes through a little bit, a few ticks, stopped out right there, minus 15. I enter short, signal with trend at 129. And I actually have a small loss, minus 5. Never punctures the white line. Blue line, close of the candle, signal with trend. I'm out at the opposite time at 151 plus 27. The winners are bigger than the losers. Close of the 158 candle with trend. Stop 1.5 ATR values away. I exit, Lance at 206, $23. Close of the 211 candle, I squeak out of that one with $7 almost. And now, Lance, here comes a puncture. Watch it. Right here, the white line. There's some profit taking and it's drifting lower. It's drifting lower. Where are the buyers? Where are the buyers? There are no buyers. I'm going to short it right there. Punctures the line. My stop is where? One tick above the candle. When do I exit? By the next time. When you know the times in advance, all this stress, it goes away. It goes away. Now, this next one's tricky. I have a $500 break-even rule with my little simple system. Lance, the buyers show up. Dun, 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 and then they're back down. That was as much profit as these guys took. And then look, ain't no buyers, no buyers left, no buyers left. Puncture, stop above the candle that punctured it. How long do I hold it? Now here's where it gets sticky. It goes straight down $1,000 per contract. I have to exit by this time, 251. So I'm only left with 600 or $60. Now, we're coming into some shenanigans here, for sure. And if you're an advanced user, I just want to draw this so you remember what I was doing and why I was doing it. If you're an advanced user, this is the splits that we teach about in Force, but I wanted you to see it there just so you knew I knew that it was there. We are going to go short right here at 251. It retests the bottom, 1825. We bring our magic calculator here, 18.25 times 20. Does not hit our $500 break even, womp womp. Guess what? This webinar, we show losers, minus 38. We'll keep going. Go all the way to the end of the day so you can see it. Puncture, stop out, didn't work. This one here starts to move down. 30 times 20 is over 500. We finish break even on the trade. Get out, get out, get out, get out, get out, get out. Cancel. Break even trade right there. Womp, womp. Count one tick. White one, no puncture, closes above the moving average with 1 minute to go. Do we take it? Sure. We actually got $4 out of it. Blue signal never closes below the moving average. Last signal, 347. We're out at 352. Bazinga, 17. I'm just following the rules that I posted on the page. So let's add up this half, shall we? Where's our magic calculator? You know, the one that had the great day in the morning. It's over here. I'm showing you this because all of the signals were based on information I gave you 2 days ago, based on the premise that the market wasn't random. 4 plus 6 plus 34 plus 27 plus 23 plus, looks like 6. Let me make sure. We'll stretch it out. There we go. Plus 6 plus 28 plus 20 plus 34 plus 4 plus 17. Here comes the minuses. Minus 18, minus 38. That one hurt. Minus 5. $142 per contract times $20 per handle is $2,840 per contract divided by 10 if it's a micro, 284 hypothetical dollars per contract if you traded the micro. Correct, Lance. So that's about $4,000 in one day. in one of the hardest markets to trade and the most random market, if you ask any trader in the world. But it's not the big boy. The big boy was the E-mini S&P. And that's the one that most of you who came here from a Facebook group are following. And the signals on the 3-minute are as accurate as the 5, are as accurate as the 15, are as accurate as the 60, are as accurate as the daily, and even the weekly. Can you do a weekly analysis with this? Yeah. Yeah. What shade of blue am I using? I've never been asked that question before. Lance, you'll be surprised to know it's the color blue. It is the shade of blue called blue. Takahiro, are you back? You're in the webinar again. Takahiro, why are you in this webinar again? You keep coming back and you never buy the ice cream. You stand outside the truck looking in the window. I would love for you to have some ice cream today. Today is your day, I can feel it. So using the same signals on the E-mini S&P, I did the same thing. And at the end of the day, I had 1, 2, 3, 4, 5 winners, 6 winners, and 2 losers. A break even, plus 2, plus 20, plus 15, plus 38, and then a little $1.50 winner, a $10 loser, and a $4 loser. But here's what I want you to see. The biggest moves of the day, 1021, 1124, 121. I was watching this with a customer live at 3 o'clock. And the customer said, when are you going to get out? And I said, I think I'm going to get out at the open of this candle, because it had been falling and falling and falling. Just like the software had warned me, 121 to 3 o'clock was the largest gap of time that day. The larger the gap of time, Takahiro, the more time the trend has to develop. And that one, from the signal to the bottom, was $57 or $2,500 per contract. We ended up finishing at plus 38. But here's what I want you to see. That signal at 3 o'clock, boom. And then the same thing happens again at 3:48. Boom, we're one candle off the high of that pullback. What are the odds of being able to do that? What are the odds of being able to do that with data that's 2 days old? And here's another question. If you know that it's profitable with a very simple setup, and you know that the times are waiting for us in the future, I have the times for tomorrow. I have the times for Monday of next week, Tuesday of next week, Wednesday of next week, and Thursday of next week. Takahiro knows this. Brian knows this. Lance knows this. You've been coming long enough. All of these times in the future are available. They are available. They also never repaint. They never move. They never disappear. They're waiting for us to trade tomorrow. And as we go back in time and we look and see how reliable are these things over time, we notice that the accuracy of the signals doesn't really change. In fact, yesterday during the FOMC, It was a net profitable day. The biggest winner was a $23 puncture winner. It was a signal with trend, a crossover trade, Lance, right here. The program had warned me on the FOMC day to look for a move up at 218 and a move down at 242. Move up, move down. We're catching most of the moves using the predictive times. FOMC day. And then the day before that, Takahiro, did it work on Tuesday? Yeah. It worked on Tuesday. The times were followed on Tuesday. It worked on Monday night. It worked on Monday. And we still go back and look. These were the times we were waiting for signals. And the banks keep showing up and doing what they do at the times most of the time. And I was sharing with another customer today. He said, how come people aren't like lining up at your door? You should have sold tens of thousands of this indicator by now. I don't understand. How are you still alive? And I said, I don't know. I don't know what it is where people don't believe me when I tell them that this thing is true. This works on Bitcoin, by the way. You can apply this to a Bitcoin chart. We had a long signal on March 10th. And on March 10th, it went from 19,965, the close of today. It went up $8,970 in Bitcoin. The prior signal between here and here, it went up $3,500. This signal, you actually lost money. It went $1,100 down. The max favorable excursion was $3,300 on that buy. And this one, again, was nearly $9,000 in Bitcoin. Michael, how come no one buys your software? I don't know. They don't like me. They don't like when I sing during the webinars or make a corny joke. Let me see if Jake's here. Jacob, you're probably in the attendees list. Let me find you here. There you are. Sorry, I make you an organizer. So this works with stocks and options. It works with currency pairs like the euro dollar, the pound yen, the Aussie dollar, the Canadian dollar. Hey, man.
Yo, what's up, Michael?
I'm doing really well. I told everyone that you are a god among men when it comes to trading, so there's no pressure today.
I've certainly helped a few people along the way.
But for the daily chart on the ES, I can't seem to see the signals based on the swing. Lance, you have to add 10 years of data. So if you were looking at this on the ES, you'll see in the data series, it's 3,650 days. That's why you don't see signals. You need 10 years, 3650. So yeah. What I want to do, I'm going to introduce Jacob here to you guys and let him show you a little bit of how he uses the software and share a little bit of his story. And at the end of this webinar, I'll email everybody a way to get started. Basically, this is the TachEon Warp program on the website, and there's a promo code if you'd like to use it. It's lowercase WARPOFF, and I couldn't use a smaller letter if I tried. Before I forget, if this is something you're interested in, the promo code is WARPOFF. When you go to checkout, it takes off a big chunk of money. I'm going to not even tell you, so it's a surprise. Right? I'm losing my way. This is the ES daily chart right now, Nick. And the settings are the same. Lance said there was a vendor that added a promo code one time, IMACHEAPSKATE. Yeah, I believe that. I am a cheapskate. Just one more thing, Tim. You mentioned, you picked this out earlier. Remember what happened when the buy signal kind of petered out right here on February 21st? Interesting, right? So before I introduce Jacob and give him the reins, I want to do something because I think it was funny and I want to share it with you. Billy and Susie were working on a job site together. And after lunch around 1:30, Susie said, I don't think I want to work anymore. I want to go home. And Billy said, well, we have to finish out the day. And she said, no, I want to go home early. And he said, they're never going to let you go home early. And so she walked over to one of the trees, Jacob, and there was a branch. And she hung upside down from the branch. And her boss came walking by and he was startled and he said, what are you doing? No, Lance, not today. And she said, I'm a light bulb. I'm a light bulb. And the boss was confused and he said, what? She said, I'm a light bulb. And he said, you are way too tired to be working on this job site. You need to go home. And so she hopped home off the tree and started walking to the parking lot. And Jacob, as she was leaving, Billy fell in behind and started walking with her towards the parking lot. And the boss, who had observed what was going on, shouted over to Bill and he said, hey, what are you doing? And Billy said, you don't expect me to work in the dark, do you? Come on, that was funny.
I'm sure it was, Michael. I'm sure it
No,
was.
not even one giggle.
But I wasn't. I can't pay attention to long jokes like that. I started zoning out on Skype, looking at all the people that are here.
She was a light bulb, and then she left, and Billy said, you don't expect me to work. Ah, shut up. All right.
I'm sure, like, they're all almost 40 people. Like, everybody's probably laughing.
No one thought
probably
that was
paying
funny.
attention. I'm sitting here drinking my daughter's juice
by
box.
myself all day. Guys, this is Jacob. I'm going to make you the presenter, bro. Thank you for coming out here today. Jacob is available for mentoring, by the way, if you're a customer and you want to learn a little more about what he's doing. He's on Skype, too, in the Skype groups, and we can connect you to him. But Jacob was a customer now for a number of years, and one of the most brilliant minds I've ever come across in terms of back testing and strategy development. Jacob has tested more setups with Warp and with Force than any one customer I know. And while frustrating at times dealing with the volcanic eruptions of his brilliant mind, he's definitely on a higher plane of energy than my older brain is. It was such a pleasure to see him. Would I be wrong in saying, Jake, you kind of turned a corner at one point and things sort of clicked for you?
Yeah, I'm always turning corners. There's lots of corners to turn.
All the corners in the rooms we're in, though, have rubber on them. So
I preferred padded walls as well. Yes.
Over a very short period of time, Jacob qualified for funded accounts with, I believe it's Apex Investing, and started to see the types of things that customers I meet with dream about. A future where not only are you trading profitably, but trading other people's money. And so I asked him to come time to time on the heels of what I'm telling you as the vendor to show you what his results are like and the kinds of ways he's found to take the signals and organize them into a setup. Before I leave, though, those of you that are here that aren't customers, you may get a phone call or an email from my associate, David. He is a member of our family here, and he's great at helping people figure out if this is something they can onboard with and the transactions and all that fun stuff. if he reaches out to you, Takahiro, all these other guys, just respond back and let them know if this is something you're interested in owning for yourself. We try to take care of everybody as quickly as possible. So if it takes him a few minutes to get a hold of you, or if you get a message from him in the chat, please respond just as a courtesy for me so he knows if it's something you're interested in or not. But it's an honor and a privilege. Jacob, those people here are both prospects and customers. I've told them you're going to be here today. And guys, I'm going to leave him with the reins. And apologies for the bad joke. I figured out why people don't buy the software now. It's the bad it's the bad joke.
Well, you tell so many. I mean, eventually one or two aren't going to land. You know, it's fine. It's fine.
Bring the light of your setup to these people. Share your story. Help them see there's a possible future and maybe a fit for what we're doing here. But thank you for your attendance. And guys, without further ado, Jacob Royall. Guys, take care.
Thank you, Michael. Appreciate you, brother. All right, I'm going to do my customary 2 deep breaths before we get started here. Everybody can take a deep breath with me. Why not? Why not do it? Everybody in. One more. Trading day is over. No more money going up, money going down, money going sideways. No more ticks up and down and flickering flecks, unless you're going to trade the European or the Asian session soon. How's it going, everybody? It's good to see you all. Bunch of names here I recognize. Hope everybody had a pretty good day today. It went up and then it went down. Went up and down. I'm assuming here. Let me switch to here. Let me do this. Let me I'm gonna duplicate this, and I'm gonna change this to a data series of 5-minute. Let's do that. Actually, let's do this too. Minute 5. Let's see here. No, the markets aren't rigged. Let me get rid of this stuff here too real quick. One sec. Background image off. Okay, these white lines here, that's my opening range indicator. That is a staple for me. Every time, every Thursday, there's the guy with the blower, but this time I had my window closed, so that's good. Opening range indicator, let's remove that for just a sec. Look at these signals. Look at these signals today. I didn't cherry pick this day. Michael reached out to me, I don't know, like an hour and a half ago. He's like, hey, you want to do a guest spot? It's like, all right, let me see if the signals are going to be tough to manage. And I saw this and it's like, sure, I'll do a guest spot. Okay, here's my guest spot, everybody. And let's get the whole day in there. Okay, so we're done. Buy now, buy now. 8:55, there's a white dot all the way up. 11:45, there's a blue dot all the way down. That's just hilarious, right? Then there's a white dot and up. Then there's a blue dot. Well, however you wanna. I mean, if somehow you caught this 5-minute on the NQ or the MNQ, this 5-minute signal at 8:55 and rode that thing like the superhero of trading that you are, and rode that son of a gun all the way up to 11:45, exited your position, reversed, and then rode that thing all the way down like a superhero that was it was like a superhero's dad, dad, all the way down for 776 more ticks. I actually wouldn't even expect a superhero to continue trading at 240. Like, you're done. You're done. And my volatility offset right here is at 0.75. So what we usually do on the webinars is a 1.5. So it's just going to make my chart just like Michael's right now, right off the bat here. 1.5, okay. So there you go, volatility stop for that 855 signal, not hit. Volatility stop 1145, not even close. Oh, damn, look at that. There's a reason, pardon my French, there's a reason that Michael for years has been using a volatility stop of 1.5 ATR. Look at that thing. Look at that thing come down there. Here's our signal candle right here. And not actually stop us out if we're using volatility stop offset. Look at that. It comes down to the tick. Oh, and by the way, if I am ever going to use a volatility stop offset, and Michael says the same, if you're going to do this style trading, don't put your stop right there. Put your stop on the bottom of the dot. That's probably, I'm just going to guess that it's 15 ticks. 2 ticks only. Oh, geez. So yeah, don't put it right on the line. There's a reason. If you want to trade the simplest way possible, dot to dot, no HMA, EMA, open price lines, patterns, none of that, just dot to dot, buy dot, sell dot, and you're going to, I highly recommend actually using a 1.5 offset for a stop, not 0.75, 1.5, and then put your stop way down here and put it 5, 10, even 15 ticks below that line. You know, you should be, yeah, if you're trading this way, you got to be trading small, smaller than you think, because your stops are going to be big. You know, on a day like this, our stop here from entry, and if we're a little bit back, that's a 286 tick stop. So you better be ready to hold on to your horses. And if you're going to have a 286 tick stop, you know, depending on your account size, you might want to consider trading micros. What's going on, everybody? Does anybody have any questions right off the bat? I know a lot of people have heard me on these webinars before. Anything you'd like to see? I don't usually take requests, but I'm in a mood for some reason. I don't know, it's just such a cool way to start the webinar there. So yeah, my role at Back to the Future, Michael asked me to tell a little bit of my story. My role at Back to the Future is, it's like a subcontractor. I don't work here. I'm not the sales guy. I tried to do the sales thing for like a month or two. Like Michael offered the job to me and I was like, sure. When have I ever gotten offered to do sales for a trading software company? I have no idea if I'm going to be good at this job or not. But how could I say no to that? So I had my brother take over the reins for my contracting business, and I concentrated on sales for a couple months. And guess what? I sucked at it. Well, I didn't really suck that bad, but probably not anywhere near as good as Dave. He's actually managed to hold on to his job. So wasn't really my forte either. Teaching people is my forte. I actually enjoy it. I didn't really enjoy sales. Some people love sales. Me, I'm a teacher. I love teaching. So my role now is the lead instructor, I guess you could call me, consultant between company and client. And I do these webinars from time to time, sometimes the whole webinar, sometimes a guest spot. Excuse me a second, I'm gonna mute for just 1 second so I can clear my throat. 1 sec, sorry. There we go. I like to do very professional webinars too, and yeah. Okay, so pinch hitter, yeah, Mark, right on. No, Lance, I'm not going to address your question. Just kidding. Yeah, no, I'm gonna get there. Lance, you had a question. Can you address my question with the range charts? Was that for Michael, the range charts? Lance? Lance is asking a question about range charts. Oh, was it for Mike? Did he answer your question, Lance? He said he would not. Okay. What was your question? Does it work on range charts? It does work on range charts, actually. Oh, no, it works on tick charts. No. Yeah, it works on tick. The other day, I remember I thought it didn't work on range charts, but it does. It does work on range. Works on range and tick, if that was your question. Yeah. Anyway, so what I do now is you can go on the Back to Future website and you can purchase mentorship hours on the website, and you can book my time. And we can book, hour, two, however much time you need to wrap your head around whatever you want to wrap your head around. I can help. I don't think that I have had a student, client, whatever you want to call my peeps, who has regretted a session with me yet. So knock on wood, hopefully that continues. It's fun. It's fun to do. We've got a bunch of different strategies that I can teach, which is kind of cool. You can go back and look at the webinars that I've done. I have so many strategies that it's almost a guarantee that one of them will fit your personality. So who doesn't have the software yet? I really hope whoever doesn't have the software goes ahead and gets the software. I mean, these times, like Michael said, these times, I'm just going to harp on this day for just a second. Of course, not all days are like this, duh. But this is just nuts. So it's not like we cherry pick this day because we just do these webinars on Thursday. This happens to be today. And these times, excuse me, like Michael was saying, we're giving out on Tuesday night on the website. And these are the same exact settings. I know there was a question asked about settings. Always the same settings. It's a requirement that I use the same settings that Michael does. These are the same settings that are that generate the signals that are posted on the website 2-3 days before today. So Tuesday night, Wednesday, and Thursday signals are released for a host of instruments, including the NASDAQ 1 minute. Not the 5 minute though. I wonder why that is. There's certain instruments and time frames that Michael won't give out for free. Interesting, like NASDAQ 3 minute. Oh, wonder why that's my favorite chart to trade with Warp. And the NASDAQ 5 minute. Interesting. I wonder why he doesn't give that out for free. You're darn straight. If I was Michael, I can't believe he gives out as many signals as he does for free, honestly. Obviously it helps business to have those signals out there, but I don't know, you might be able to do it with half of them. Maybe not though. You know what I like to do? Every once in a while, I like to reach in the refrigerator. I'm from the East Coast and we don't say refrigerator. We say refrigerator. I like to reach in the refrigerator and steal one of my kids' juice boxes. Today we have Capri Sun, all natural ingredients, fruit punch flavor. It's a little dangerous around a keyboard. I almost squirted all over the keyboard when I was trying to open it. Almost had a catastrophe right before we started the meeting. What are we talking about? Does anybody have any other questions? Oh, the squiggly line on the chart right now is a 21 period HMA. So there's 1,000 ticks. That was 1,000 ticks, right? If anybody, any of the current customers who are smart enough to buy this software, and if anybody actually took these NQ 5 minute trades, signal to signal, I want to give you a free hour of my time. Shoot, I'll pay you to hear your story. You're gonna have to prove it to me though. You're gonna have to show me your trade log, because if you actually took these and held, I will. That is worthy of Market Wizards. You deserve to be in Market Wizards, the book, the next one coming out whenever he puts that out, if he ever puts another one out. Look at that. And then we go, and then we do go up. However you want to look at this signal here, it kept going down a little bit, but I mean, it's pretty crazy right at this white dot. Just a few minutes later, that's when we make that push up. Insane. We push down a little early here, and you know what this is, everybody? That right there is a pattern 4. That's a new low. It's a new low, or it's a low that's equal to the previous lows. So what we call this blue dot right here, if you're an advanced user or moderately just familiar with the software and some of the things that Michael teaches, some of the warp theory, that anytime you have a blue dot with a lower low or a new low or a low that's equal to a previous low. That's how I quantify them all. That's a pattern 4. So it inverts this blue signal, which was a sell signal. The selling's already done or pretty much done. And we can actually have a higher probability of the price reversing and going up here. So because we pushed down, 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 I mean, especially when you zoom in a little bit here. We pushed down right into the signal candle right here. Well, we've pre-made our slippery slope to the downside before we even got to 325. So that's pattern 4. So absolutely not surprised that we proceed to the upside at 325. Geez, I feel like this is one of those ones that I could just print it out and frame it. Maybe I should send it to Michael as a birthday present. Print this thing out, maybe draw some more we can have arts and crafts time, you know, can maybe, I don't know, highlight this, just do one of these and, you know, maybe one of those or something. I can change that color, put a couple other little things over here. And it's very professional, very, very professional webinar we're doing here. So let's look at, Jake, you live in California, right? Yeah, I live in California. Are you smoking things? No, I actually don't. I don't smoke anything. Look at this FOMC. Check this out. It's some craziness. We start out the day at 8:40. This is all East Coast time, by the way. 9:40, and we chop around. This took me by surprise yesterday. That's a puncture. Oh, look at that. We're going down. So we got puncture here. We go up, and then we go up, and then there's a blue dot. We go down, and then 110. 110. Interesting. So you're telling me that that white dot was posted out there, and sorry for anybody who's all you current customers, you have to bear with me because I feel like getting some people to buy this dang on thing today. I want Dave to get some phone calls. It's time. It's time for Dave to help get on board here. So if we just add a little bit more margin with extra sauce. So you're telling me that this 110 dot is just out here waiting and we're expecting that there's a higher probability of the price going up at 110, really? Okay. Yeah, sure there is. Yeah. Oh, geez, it is going up. Huh. Oh my. And then bam, crash time. I surely hope that if you did take this trade, somehow you're psycho enough to trade and then hold through the FOMC. I hope you took, I mean, what do we get up to? 629 ticks profit? Come on. A little less than that. We got up to a max favorable excursion of 650, 670 something ticks. It's like, dude, take your profits at the close of that bar. Don't be greedy. No, and then we come down, and if you held that thing, it's 808 max, and if you're silly enough to continue to hold it, then you eventually get stopped out, which ain't surprising to me because it's FOMC. But that is pretty cool stuff. Oh, look at this pattern 5. This is the opposite of a pattern 4, which I just went over with the blue dots. So as we're coming here towards this white dot, which means that there's a higher probability of the price moving to the upside than to the downside. If on the way to that white dot, you start to see the price moving up. Okay, wow, geez, it did move up. Moved up to there. And then here's our signal candle. This little guy right here. This was a new high as far as I'm concerned. This candle is also part of the 3 candle sequence. So the signal candle itself, the candle to the left, and the candle to the right. If any one of these 3 candles make a new high or a higher high or a high that's equal to, then we can consider this a pattern 5. So it's no longer a white dot. The up move has already happened, and We're now calling this a pattern 5. It's the opposite of a initial white dot. I was going to say the opposite of a white dot's a blue dot, but it is. So anyway, the initial pattern is a pattern 1. The other odd number, the other fraternal twin of a white dot, is the pattern 5. 1 and 5 are both odd numbers. For blue dots, you have pattern 2. Blue dots start out as a pattern 2, and if they invert, then they're a pattern 4, both even numbers. So they're the even number family, and they invert 2 to 4, 4 to 2. So that's pattern 5. So not surprised at all that the price went down, 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 and then we have a pattern 4 right here. So we could possibly expect the price to continue moving up. Our HMA is blue, so I wouldn't be taking a long there. And not surprising, we keep pushing down. I mean, it is FOMC, and we make another low and another low. And then, oh, the day's over. Day's over. They just jammed it down. Jammed it down. The no sell between 110 and 330, Eric. 110 and 330. Oh, I don't know. What do you mean? Sell time? Oh, did we miss a signal there? Oh, look at that. Yeah, there it is. I just had it off the chart. This 250 here. It's always it should, if the signals aren't oscillating, something could be wrong with your data feed, your platform, or something. So 110, 250. So white dot, blue dot, white dot, blue dot, white dot, blue dot, and so on. Yeah, a little more of my Capri Sun here. I'll show you guys some stuff. Dave, did you post your phone number in the chat? And anybody who is not a customer and is not aware, there's financing available as well, which is pretty cool. They didn't have that when I first bought software. Dave's number is, where's my chat? I got to open my chat. Dave's number, he's the sales guy. Give him a call, 727-742-2626. Yeah, there's like the discount code you can pop in on the website, WARPOFF, WARPOFF. But I bet you if you call Dave, not only would you get that discount, but he might even hook you up. Probably if you call him today. I don't know if he does that kind of call now and blah, 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 or don't be late because you might not get kind of stuff, but you know, he probably does. It's normal sales. But I wouldn't be surprised if you call him today that you'll get that discount. Plus, he might even, I don't know, give you a free hour or so of my time, so you don't have to purchase it later down the line if you want. But you know, the software does come with plenty of training. You definitely don't need me. You don't need Michael. You don't need Ron. There's plenty of training. It's fun to do though. It's fun to have people, actual people in the trading world. We're pretty lucky here. Once I got this software, I felt like I was plugged into a community. Not that that's why I bought it. I actually didn't even realize it. And over the course of the first couple weeks, I was like, I didn't expect all this stuff. Like Michael's giving me spreadsheets and like he gave me some extra other things that I didn't even really ask for, just because he wanted to help me. Stuff that was not even included with my original Warp purchase. It's like these guys really care. Michael and Ron they're good people. Yeah, they're software developers, but they're still good people. Michael's an engineer, but somehow he remains a good person. I don't know. In my contracting business, if it's usually the husband would be the engineer, and say like the wife calls and wants a quote, and I can just, I don't know, I get a feeling, and I don't know, maybe I have a good rapport with with this potential client on the phone, and I might even ask, so it sounds like, oh, you're telling me that your husband's kind of picky, huh? Yeah, you want to hire a contractor who really does a good job, you know? Your husband's not an engineer, is he? Oh my goodness, how did you know? Yes, he is an engineer. And immediately my brain goes, charge double, double, double. And sometimes I will, because I don't want the job. I don't like to work for engineers. But Michael, different story. I wouldn't want a contract for him with construction, but I bet he does almost all of his own stuff. Anyway, if I had to guess. Do you guys want to see how my opening range theory would have worked on the 3-minute chart? I was looking at it earlier. Where is it? Well, hold on. Is there anything else I wanted to show anybody over here? No, I kind of went around the long way through the woods, a couple tunnels around the mountain to give a brief overview of what white dots and blue dots are. I think we're probably good. No questions so far? Okay. So let me go in and I'll teach you folks a little bit of, or at least most of, the strategy that I've been getting some really like amazing feedback on. I got this message the other day where at first I saw it and like I don't know, I wasn't in that good a mood, and I saw the post that this gentleman had sent me, and I was like, I don't even want to look at that. I don't want to see that. I just don't want to see it right now. And then I went and looked at it like the next day, and I was like, oh my god, the system's so good. This software is so good. So good. I don't really know exactly how the system would have performed today because I didn't trade this particular system today. But after that message from that gentleman, a guy that we had a session with him, he paid for a session last 3 weeks ago, I believe it was. Every once in a while, I'll get a client that I'm like, this guy's gonna do it. He's really gonna do it. He's actually gonna trade this thing, and he's gonna stick to the rules. And he might even share his results with me because I teach a bunch of different strategies. So I like to share as many of them as I can. And some people will trade one, some people will trade another, and then I'll get emails out of nowhere, not even requested, saying, Jake, I've been trading your blah blah strategy, and it's really been doing great. And here's some results. I'm like, oh, sweet. Well, thanks for letting me know, because I can't trade all the strategies at my freaking brain's like it's nonstop. So let's see, 3-minute chart. Let's get rid of this shenanigans in the background here. And I'll show you folks a little bit of my opening range theory. Let's see. What is it? Take it down and bam. All right, it's a little complex, so buckle up. But we can always schedule one-on-one if anybody doesn't get it. I'll just go over the basics. Well, I guess I'll just go over all of it. It's not that complex. But it'd be cool to meet with you one-on-one if you need to. So we're gonna do, well, okay, let's start at square one. Back up, take a deep breath. All right, this is a NASDAQ or micro NASDAQ 3-minute chart. And you might be wondering, well, those candles don't look like 3-minute candles. Well, they're not 3-minute candles. So here's what I do. Go to data series, and you're gonna wanna add a 3-minute data series. It probably already starts out like that. So start with a 3-minute data series. Then go ahead and add your warp. Add your time warp. Bam, same regular settings, calendar days, 7/14. Of course, you can optimize this. This is just the settings that we use on the webinar. Swing 8, 7/14 calendar days. My volatility stop, ATR multiple for punctures is 0.75. We can see how it does with or without that. Not sure which one would have been better today. Who knows, but we can check it out. And so once that's set up, then you're going to want to come in and you go to your data series. I'm going to go fast, but you can always check this out again on YouTube tomorrow. It'll be recorded. You can pause things. Well, I'm not going to go that fast. So you're going to add a 90-second MNQ data series. So you're going to go up here, second, 90 days, make it 30 days. You need 30 days on both of them. 30 days. Then we're going to go to candle body outline, whatever color you want to make the candles. And then once you get both those charts set up, make sure you don't have to do this. I think it's easier for instruction. Just make all of your 3-minute candle stuff, all of it transparent. The body outline transparent, the wick transparent, color for down bars transparent. So the 3-minute candles are on here. You just can't see them. Don't need to see them. It could be argued that you might want to see them if you're using patterns, but we're not going to use patterns. We're just going to go super simple with the strategy and see how it did today with blue dots and white dots. And then the last thing, this 90-second data series, the second data series for the MNQ, you're going to want to go ahead and make sure that the panel under visual is 1, not new panel. I'll show you what 2 would do. Here's what 2 does. Well, apparently it does nothing. Well, it should put another panel down there. Maybe it's down there somewhere. But anyway, make both the panels 1. 3-minute 1, 90-second 1. So now you got the 90-second candles that you can see. The 3-minute candles are behind there. Make sure that on your properties that you do not have the allow the selection or drag and drop of chart series box checked. Because if you do, then you might accidentally click on candles behind here, and you don't want to be dealing with that while you're trading. So let's see, margin 200, that's probably good for now. Okay. So these 3 white lines here, this is the opening range indicator. And this is all East Coast time, opening range indicator. It's free on NinjaTrader. You just go to NinjaTrader ecosystem, whatever it is, .com, and then just plug in open range indicator, and it'll be there. Just download it, install it regularly as a Ninja script. 9:30 to 9:45 time frame. Make your high line. I like white, white, and white. 111 for thickness. You don't really need to do anything with these. It's just these 3. So the time frame that we're going to be looking at is the first 15 minutes of the market. That's the market opening range as far as the strategy is concerned. It's a 15-minute opening range that can be attached to the 3-minute data series, and those are those white lines. There's the high of the first 15 minutes, there's the middle of the first 15 minutes, and there's the bottom of the first 15 minutes. So here's the open, and 45 is right about there. So, and those lines just keep getting extended. This squiggly line here, this is the HMA. Now it's a special HMA in this case. Reach out if you don't have the TachEon color MAs. If you have the software, I believe if you just go to the website, log in, go to the page. I believe the color MAs are listed on the products that you've purchased, even though they're free. If not, sorry, Rachel, but I'm just going to go ahead and throw your name out there. Reach out to Rachel and she'll get you a copy of the color MAs. Or I might be able to send them to you. I don't know. You set up a session with me. I'll definitely help you get them. So anyway, so the reason that I'm using the TachEon color MAs and not the moving average that is part of the TachEon TimeWarp indicator is because I want, actually I don't need 2 of them on there. I want this opening range. Oh no, I'm not doing it like that today. It's even more simple. Never mind. Just use, I forgot I didn't want to bother with that because it's kind of a pain. We'll just use a regular 21 HMA. We don't even need that on there. Let's get rid of that. We don't even need it. But you can add that HMA separately, but we're actually just going to use, the reason I was going to do that is you can attach it to the 90-second data series, but we don't need to do that. Let's just attach it to the regular 3 minutes. So down here in TachEon TimeWarp settings, under moving average, MA type, it's going to be HMA, that's a whole moving average, 21. There it is. In case anybody's not familiar with a whole moving average, it is my baby. It is, in my opinion, by far the most efficient and best moving average ever designed. Where is it? I was just showing my brother last night. Whole moving average. It's an integral part of this system. If you're not going to use patterns, you're just going to use white dots, blue dots, Yeah, I recommend using a whole moving average, and it's 21 period. So the formula for a whole moving average uses two different weighted moving averages of price plus a third WMA to smooth the raw moving average. There are three parts of this calculation, and the formula listed below and indicates the number of periods. So you take the two MAs, one with specified number of periods, and then one, you don't need to do any of this, it just does it for you in the indicator. But the most genius part of this whole thing, well, all of it's genius, the third smooth the raw HMA with another WMA. This one with the square root of the specified number of periods. It's that square root that gets it to hug the price action so beautifully. And I mean, it's as reactive as a much smaller time period EMA. Can't see it as well but if I were to put the 3-minute bars on here, you would see it. But if you just look at the HMA here, see how smooth it is? Look at that flip right there. Look at this little section of blue. So we're not going to be caring about the close above or below. I just care about the color, and that's people like that with the whole moving average. They don't talk, from what I've heard. It's not as much about the close above and below. It's more about the slope. So this beautiful little simple indicator that the guys made simply just changes color when the slope is down. So it's quantifiable. And we come up and then down, just so smooth, that square root smoothing. Little dip here. Yeah, it's just a thing of beauty. Okay, so we got our HMA on there. I think we're all set up. And then what we're going to do now is we're going to add, just leave that on there for a second. That's our opening range. So these levels, the high, mid, and low, they are going to specify all of our entries, targets, and stops for the whole day. So what's really cool about this is you can basically get an idea, well, pretty much definitive, unless your ATR gets crazy. For most of the day, you can probably keep your stops and targets the same all day, which is pretty sweet when trying to qualify for funded accounts and just keep a nice, smooth, relaxed equity curve, even on your personal account. Why did that? Oh, crazy. I just gotta check something real quick. I had an alarm go off. Must have lost connection for a second. Oh yeah, it's that time of day. Okay, so we're gonna take this modified Fibonacci tool, not this one, this one. And send me a message in Skype. I can shoot this over to you if you like. And we're gonna load up. Let's do this one. We're gonna load this up here, and this purple I wanna just place as the opening range. So place that at the bottom, and then I want the top of the purple at the top. So just cover up the white lines. See how I covered up the white lines there? Ding, 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 and right there. And I like to zoom in and really get that tight. So cover up the white lines with that black line, and then with the middle, it's pretty good. Top, that could be a little bit better. It's just a back test, so doesn't need to be perfect. And there we go. Now we can lock that in. My Skype, by the way, is Jacob Royall, I believe. It's just Jacob Royall, I think. Let's see. I don't know why I'm questioning it. I know that's what it is. Jakeroyall. Let me just throw it up here though, so you can see it. Jordan, yeah, it's the only settings I'm allowed to use on the webinar are 714 with the swing 8. I know we had talked about using some other ones, I believe. But that's for the 5-minute anyway. So this is 3. 3 works pretty well with the 714. Here it is. Skype contact, Skype profile. There you go. Yeah, just find me Find me on Skype, Jake Royall. Share profile. You know what? I'll just, I'm going to post this in the chat too. So feel free to send me a message on Skype. It's the easiest way, best way to get a hold of me. If you want to book a session or if you want this fib tool or whatever, definitely prefer that over email. Let me put this in the chat. Why did my chat disappear? Oh, there it is. Bam. Okay. Fix Skype above. Any questions so far on what we just went over? It's like just setting it up is actually going to be is going to take more instructional time than actually showing you how to trade this thing. How long is the opening range? For 15 minutes, Todd. 15 minutes. So from East Coast, 9:30 to 9:45 right here. This is the whole opening range. Now, some people prefer to use a 30-minute opening range. That's fine. Go for it. I don't care. 30-minute could be better. Trade it. Let me know. Go for it. If it was a 30-minute, we would be, see, there's 10 o'clock. So 30-minute would be pretty similar. 30-minute would be here. Some people like an hourly opening range. Of course, that means you can't trade the first hour because you don't know what your standard deviation is. Then standard deviation is what I call the distance between two of these points. I'll explain that in a second. But if you use an hourly opening range, you'd have to go to 10:30 right here, and then go all the way to the top of 10:30, which would be here. So this would be your hourly opening range. But then you can't trade the first hour. I don't know, could be better, let me know. But for now, we're just gonna stick with the first 15 minutes. Oh, great. I gotta reset my, there we go. Good enough, that's good, that's good, lock it in. Lock it in there. Okay, let's get that out of there. Okay, so pretty obvious where our opening range is. Just keeps going and going and going, extends. Actually, the next day is pretty cool. The levels will work pre-market for the next day. Pretty radical stuff, this opening range theory thing. So when I say standard deviation, I mean one of these four chunks. So basically what we're doing is we're splitting the opening range up into four sections. 1, 2, 3, 4. Each one of these blocks, if you will, is today's 46 ticks. It's very tight for the NASDAQ. The average is more like 70 or so, 65 to 85. So 46 is small. So I was a little leery. Yesterday it was even smaller in anticipation for the FOMC later. I mean, it was like the smallest I've ever seen. It was like 29 or something. I don't even want to look at it. So we're going to look at this is today, right? Yeah. I don't even know how today would have went. Well, we'll find out. So the idea is to have a one position, one target, one stop. So let's change this to green to symbolize our target region, and we'll change this to red. I'm just making this as a little example over here. I hope some people try to trade this thing, trade it on Sim, of course, first, and then let me know how it works. Trade it with your favorite settings. If you're already a customer and you have favorite settings on NQ or whatever other instrument, trade it with your favorite settings and let me know how it works. I'm getting a lot of good feedback, and I've personally traded it and qualified for an Apex account with it. So our target is going to be here. Our entry is here, and our stop is here. And I'll show you how we get in. Target, stop. Oh, I did want to touch on another thing. So right off the bat here, after the first 15 minutes, I can come in and I can go, all right, cool. Well, what kind of risk do I want to use today? Let's see, it's a 48. You're going to want to offset your stop by at least 5 ticks. We'll just call it 50. So we got a 50 tick standard deviation today. It's actually 48, but we're going to say 50. I'm going to bring in my risk calculator, which is just a spreadsheet with this is Ron designed this spreadsheet. This is one of the things I got that I didn't expect from the guys. And right here we have the ticks. I'm not going to go all the way into this spreadsheet, but the tick value of the micro NASDAQ is 50 cents. We'll just say the commission's about $1. And right here is the contracts, right? So we can just say that 1 micro is $27 with commissions. Well, that's not enough. I need more risk than that. So let's just change that contracts to 8. 216. I want to keep it under 200 bucks. Say $200 sounds better. Oops, sounds better. Let's keep it under 200. There you go. 7 micros. So now I know that I'll be trading 7 micros all day with this strategy. Pretty simple. And you don't have to mess with that really at all. So what we're going to be doing is we're going to be looking for pullbacks to these standard deviation levels. So pullback to here, or a pullback to here, or a pullback to here, or a pullback to here to the colored bands. These other little lines in between, those are just for if you want to trail your stop or reduce target or expand target. But it's really the color changes that we're looking at. So the full deviation there. So the idea here at this white dot, I think we start out with a win. Oh, well, we can't trade till 9:45. So we have to do, actually really don't know. 9:45 here. I'm gonna have to cherry pick a win just so we can, I can just cherry pick a loss. Let's see, 9:45. I think we do start out with a loss here. Where the heck is 9:45? Here. Yeah, we do. We start out with a loss there. Let me just see, like that's just a thing with this 46 tick stinking 48 tick standard deviation. That's scary. One thing that I will say about this strategy, if you have a standard deviation that ends up at like 47, 48, under 50, I almost suggest expanding. Like you want to try to get your targets to about, and your stops to about 75. I mean, because like look at the ATR here. The ATR, by the time we're allowed to start trading, so this would be, yeah, right here. Our ATR is 85. Well, if our ATR of the last 7 bars is 85, and we only have 50 tick stop losses, that's dangerous. I would much rather see if I can do, I mean, on a day like this, we might want to do 3 boxes or 4. So that's something that we can debate. But let me just find one entry that just works. Yeah, today's basically, it's one of those days where you're gonna need 2. Yeah, I looked at something earlier where it was, oh, there's one. It's not that clean though. There's one. That's not that clean either. There's one. There's a clean one. Okay, so blue dot, that means down. Blue HMA, so we're good to go. That's it. Don't even worry about the open price line, although I do like the open price lines. But just say blue dot, blue HMA, that means we can start looking for pullbacks. So let's see, right here. It's not clean either. Need something that's like really obvious. Oh, there we go. That's perfect. So at 12:57, we got a blue dot. That means down. We got a blue HMA. And this is our signal candle right here. So we need this candle to close. And since we're shorting at blue dots, here's the close of our signal candle. We're going to look for a pullback to the deviation line above and then a target below. Our stop's going to be one line above. And our target is, yeah, one line below. On a day like this with a small stinking SD, you might want to consider having well, the SD is not in alignment with how big the ATR is. Not too bad. See, in the afternoon, it's getting better. 70 tick ATR, 50 tick standard deviation. So that's a little bit more in alignment, which is probably why the system is working better. So on days like this, I oftentimes will either not trade the morning and wait for the afternoon, or I'll expand my targets and my stops, or I'll look for multiple line pullbacks. And by multiple line pullbacks, I can explain that too. Well, let's use the morning for that. So let's see. Yeah, this is actually perfect. So white dot, that means up. So we're looking for longs. We have a white HMA. But because our ATR is, let's see, at time of signal, our ATR is 91. Dude, it's almost a double our standard deviation. 47.48. I mean, yeah, it's practically double. So when it's like that, I'm gonna look for, so here, this is our signal candle. Here's where it closes. I'm gonna want two lines. I need it to cross two lines. So one line, two lines. In this case, that candle's right on the line, so I'm not gonna count it. Let's zoom in so you guys can see it. If it's that close to a line, then that doesn't count. And by that close, I mean within 5 ticks, 3 ticks. So our candle closes here. So I'm calling this one line, this another line. So oftentimes you'll have this on the NASDAQ too. On the ES, not as much. The ES, one line, go for it. But we'll need one line, two lines, and now our order is going to be placed here. And it's a little complicated, but after a while, you'll get it. And we're going to still be looking for one standard deviation up, and our stop is going to be one standard deviation down. So it's still that same distance, right? Here's our standard deviation. But you can take this and you can move it wherever you want. You just want to be more in alignment with the ATR. So in this case, our entry is at the top of this, our candle closes at the top of this box. We'll just say it's right on the line. We want one line down, two lines down. Our entry is at the top of the yellow box. Our stop goes one standard deviation down, but this time we're offset, and we hit target here, and we take some heat on this. You know, we take 35 ticks of heat, but we come out with a win. You know, like with this system, if you're using the right amount of risk, you're risking $200 per standard deviation, we can just say, per whatever the day is. Just always say you always risk $200. Well, just get to 3 wins and be done. That's 2, 4, 6. It's $600. You don't have to go for 12 wins. Go for 10 wins, because you'll take a win, you'll get a win, then you'll get a loss, then you'll get a win, then you'll need another win. But just go for 3 wins. Let's see here. These signals were really pretty far apart today. So we're using the 150-second candles as our pullback candles. And you could use the 3-minute. Shoot, they might work better. I've just been really into my candle overlay thing lately. Sweet, most everybody's still here. Does anybody have any questions? Geez, I think everybody's picking it up. Oh, picking it up. Awesome. Let's see if the 2-line thing worked. Oh yeah, well, our HMA doesn't turn blue till here anyway. So here's another one that's on the line, right? This is cool. Let's do it like this. So we're in our sell window. Let's turn this red. Uh-oh, now I'm getting into it. Because I'm allowing myself to speak the full complexities of the strategy. It's when I try to dumb it down too much, or I start getting frustrated. Like, I need people to know that with the NASDAQ and the ATR all not in alignment with the standard deviation, that it takes a little bit more thinking. Sorry, heaven forbid we got to think when we trade manually, you know. So here's our sell time, 11:09. This is our full sell window here. So our HMA doesn't turn blue till here, which is late. Kind of sucks. This is why, if you wanted to, and I'll just show you another what I wanted to kind of say earlier. So you can take the TachEon color MAs, they're free. You can reach out to Rachel, she'll get them to you, or reach out to me on Skype and maybe I can find them and send them over. I think I can actually, I don't know. And then you still use the 21 HMA, but attach it to the 90-second and watch this. So let's make that one, let's make this a 2 so we know which one is which. So this one is attached to the 90-second, check this out. Look how much earlier it flips. 90 seconds flip in there. The 3 minutes flip in there. So it can hurt and it can help. In this case, it helps. But you know, we still don't get the 2-line pullback there anyway. We don't get a pullback there. So from this point forward, we're looking for shorts. Or if you're using the 3-minute, we're looking for shorts from this point forward. We could do this or that. And let's see, is that one? That one's like on the line. So that's, you know, we'd be looking for 2 back. So here's one. This candle closes here. We're on NASDAQ, and our ATR at the time of this candle close is about 69 ticks. So I'd still look for 2 lines. We've been doing 2 lines all morning. So we look for 1 line and 2 lines. So eventually you'd get to here. It's a little complicated to backtest this, which is why I really appreciated the guy who I had a one-on-one with this, pretty much this strategy, and he actually backtested it. So it's pretty awesome because it can be challenging. You got to bust out a 10-second chart sometimes. So once we get to here, notice that this candle, if we're using a 2-line pullback, notice that this candle closes here. So now we have to readjust our order back to here. It's a lot easier actually in real time. So you can see that we need that. This isn't on the line. You know, that's 1 line. That's 2 lines. Our candle close there is 8 ticks away. So that's more than 5 ticks. So we need a 2-line NASDAQ pullback. Our ATR is, that's 1130. It's starting to calm down. It's still above our standard deviation at 67 versus our SD that's 50. So there's our 2-line pullback. See if we get hit. Yes, we do. So our limit order gets filled right there. And our stop is simply, in this case, it happens to be on the color change. Our stop is here. And our target is 1 line down. 46 ticks away for 200 bucks. And there it is. So that's the basic idea of the strategy. I don't really have the energy to go in and test this whole day. I did look at it earlier and it seemed like it was pretty good. That's kind of cool though to see the it's actually, that might be a good trade. So let's look. So it's blue HMA, still blue. So we got a white HMA on the 90-second. So if we're using 2 lines, we need a line and a line. Does that happen? Nope. And here I think we get stopped out. So 1 line, 2 lines, still no. Okay, then you're filled. And now you're halfway. I work with this friend of mine, and he's very adamant about moving stops to break even. And I have to say, he's right most of the time. So if you wanted to do a break even thing on this strategy, as soon as you get to halfway to your target, just move to break even. Because at this point, we are 8 ticks away from hitting our target. Our entry is here. That's right, a little down. And our target is here. Our stop is down here. So we get to break even there, and then we either get stopped out at break even, or if you didn't move to break even, then you get stopped out there. And then we come up on a white line, and we're looking for 2 lines back. Don't get a fill there. Don't get a fill there, still no. Here you do though. If you're looking 1, 2, then that one would probably be a stop out as well. But you get the point. And no entries there. Yeah, so there's that, and then there's like also this other super simple method. Doesn't seem like this day was particularly great with that method, but overall, it's really cool because you can keep your risk and your reward very, very, very smooth throughout the day. And drawing tools, remove all. Yes, okay. Yeah, it's kind of interesting to see the difference of the HMAs. So if we go to indicators, we can add the open price line back on there. I just want to just show you another strategy that's way different. I'm not going to go over much of it, but just as an example of multiple different kinds of strategies. Like some people can't stand limit orders. Some people want to use market orders. Great. Well, I got a strategy for that. You need the open price line though. Warp. And we'll go to open price line. Show. Okay. There we go. And let's get rid of this HMA. Make it simple. What? I thought I just got rid of it. Move. Opening range, don't need that for this. Move. Okay. There we go. So with this strategy, just see if I can find a winner. This day was pretty tough. This strategy is and then I'll show you a loser. So white dot, that means up. If you're using patterns, I highly suggest using patterns too. Unless you have super awesome settings that you've been using and you don't need patterns, but I don't know. I pretty much mostly use patterns. So this is a pattern 5, but if we're using just dots, then this is a buy time. So with this strategy, we got a white dot, that means buy. We got a white HMA, that means buy. Then we have a candle closing above this white line. This white line is called the open price line. So as soon as the candle closes above the open price line, we're going to enter a market order long right at the close above. So you have white dot, white open price line, white HMA, and then you can either, this is a little fib tool that I made. I can send that to you too if you reach out to me on Skype. We're going to have one target, and as soon as that target gets hit, move the other one to break even, and then you could have a second target up here, and then you could have a third position for a runner. Actually, some of the best feedback that I've been getting is just having a one target. Just a 1-to-1, just a 1-to-1. Offset your stop by a few ticks down here. But it seems like that's actually working better for a lot of people. And then you hit your target, then you reset with a different color, with a blue HMA for a second, and then we turn white again. So if you wanted to, you could enter again on this candle. And you could take a T1 that way. So that would be hit like right about there. And let's see, blue dot, and right here our HMA turns blue. Looks like a little late, tiny little candle too. I'll see how that's not getting stopped out, and that one stopped out. For this, you might want to actually use the 3-minute bars and or the HMA that's actually associated with the 75-second candle that's on here, or no HMA at all. So I've heard people get good results from all sorts of different mixed ideas. Anyway, that's all I want to go over. I'm starting to get tired. I hope everybody had a good trading day today. Did Michael run down the purchase page? I should probably do that. Look at this craziness. Is this today? Yeah, 5 minute, 3 minute. Yeah, let's do it. So to buy the thing, back to NinjaTrader.com. If anybody who doesn't have software is interested in learning more about that previous strategy, there's some YouTube videos that are posted on the Back to the Future YouTube channel that I did a few months ago, where I go through and I test, literally back test a couple days, the 2 days that are posted on the website, the Wednesday and Thursday, and actually add everything to a spreadsheet. We can see exactly what we made and lost. I might be able to find those, but they're back there. You'll find them. If you're on the fence about buying, though, I highly suggest going to find those. Shoot me a Skype message, and I will personally send you those YouTube videos, because it's pretty extensive. I did a few of them. I think I did like 3 of them. I hosted the whole thing. So I don't know. I've done that enough times where I just don't want to do it anymore. It's like I get bored. BackToFutureTrading.com. Go to your product store and TachEon TimeWarp. And scroll all the way down to the purchase page. Click your Buy Now button. Go to check out Without Pro Training Room. There is a Pro Training Room that you can join as well for Tuesday, Wednesday, and Thursday. Tuesday, Wednesday, Thursday, Friday. When is Ron's room? Wednesday, Thursday, Friday, I think. Yeah. And then you can throw in your promo code, WARPOFF, fly. Get you $500 off there. And also call Dave. I bet you he'd throw in an hour of my time for you folks. I think that's it. Dave's phone number one more time. Yeah, give these guys a chance. I highly recommend getting plugged in with us. Where's Dave's phone number? One more time, 727-742-2626. Hope everybody has a good Friday and a good night. And we'll talk to y'all later. And remember, there are no mistakes in trading, only happy accidents. Over and out.